Hi there everyone, welcome back. Avan Dabash as well joining in on Market Fatafat. Lots more stocks to discuss on the show, but let's first bring on board Chheda as well, who's joining in on the technicals. And Forum, let's begin by discussing your first recommendation, and that is JK Cement. Is it a good buy at the current price?
Is a good buy at current levels. Actually, last week the stock price did make a breakout from a resistance of around 2980, which now becomes a support. So currently the buying range is between 2980 to 3000, and one can maintain a stop loss below 2965 and can expect an upside target of closer to 3090.
Keep an eye out on those levels for JK Cement. Let's move on, talk about VIP Industries. This one is in focus and buzzing in trade because Anand Rathi has initiated coverage on VIP Industries. They've given a buy recommendation and a target price of 850 rupees per share, which implies an uptick of almost 47% increase from yesterday's or around today's target price as well. Now they believe that the company has had a renewed focus on the mass segment and e-commerce segment as well, mainly to regain the lost share, as well as they are the market leader in the oligopolistic sector as well, where they this is a very lot of players in the sector. More focus was on these unorganized sectors. They currently do have a 43.8% share, but yes, they believe that that will furthermore increase as well. And obviously the focus is going to be on mass segment from the company, which will be supporting the growth going forward as well. On the back of that, let's keep an eye out on VIP Industries as of now, trading with gains of 1.5%.
All right, let's pull up stock number 23, Z Entertainment, and boy, it's been a newsmaker all month, I think. Finally, a little bit of respite coming in, but these are only news reports which actually indicate that the company is going to now start settlement talks with its creditors to repay debts and actually remove the last hurdle in completing that merger with the Sony Group that is going to create the $10 billion media giant. Now, do remember IDB Bank, one of the creditors that had moved the insolvency court, they had offered to repay a loan of about $1.8 million in tranches. This is according to reports. And they are in separate discussions as well with Axis Bank and JC Flowers, what we understand, asset reconstruction unit, to settle dues to the tune of about 40 odd crore rupees. Now, these repayments are going to be very crucial for the merger. It's going to create a huge media firm with a strong viewership as well, where Sony Pictures Network will own a little more than half of the shares. Once the deal is completed, Z's founders are going to own about 3.9% stake and public shareholders will get the rest. But the stock gains have completely fizzled out now, lower by 1.5% in trade.
All right, moving on, let's talk about another stock that's under pressure in today's trading session, and that is ICICI Securities. This particular counter is under pressure after a decline in their Q4 numbers. So at one point in time, the stock was trading low by about 6%. This because the company reported a 22.7% in their profits in the quarter gone by. So the consolidated revenue from operations stood at around 885 crore rupees versus 892 crore rupees on a year-on-year basis, while their EBITDA came in lower by about 2.5% at around 549 crore rupees. If you look at the profit number, that one saw a dip of about 22.6% on a year-on-year basis, and the margins also saw a decline of 108 basis points, coming in at around 62%. Apart from that, you have Axis Securities that has trimmed the target for ICICI Securities to 550 rupees per share from 600 rupees per share. This after the company reported numbers which actually went ahead and also missed the street estimates. However, they've gone ahead and retained a buy rating on the stock due to its inexpensive valuation. So that's one of the reasons why also the stock is under pressure. Apart from the numbers, also the target coming in from the brokerages.
All right, watch out for that stock in trade. But another buzzer and on the upside is Titagarh Wagons. Could be the now impact as well because we interacted with the management. But do remember, the stock has been a buzz ever since BHEL and the company won that order of 80 trains. They were declared L2 in the month of March, and they lowered the bid to about 120 crore rupees per train from 140 crore rupees. The contract valued 24,700 odd crore rupees. The delivery schedule for which is 2 to 5 years, and the maintenance contract is for about 35 years. Now, we interacted with the management as well today on the channel, and they said that the execution of the Bangalore Metro as well is expected this year. They're setting up parallel capacity for the Metro and Vande Bharat orders, that they are expecting margins to improve once the capacity ramp up begins, and that Vande Bharat is a transformational opportunity for the company. We do know they're venturing into the wheel set business as well, and that's going to be in partnership with RK Forgings. So a lot of these factors are keeping the stock very abuzz in trade today.
Absolutely. And on that note, let's just go across and listen into the management. We have Vice Chairman and Managing Director Umesh Chaudhary joining with us. Let's listen into what he had to say.
With CRRC, we are executing the Bangalore Metro, or we will start the execution of Bangalore Metro this year. We have bid on a number of other tenders. And you know, it is again one of the stated policies of the government that there would be metros in every large and medium-sized cities. So one train a month, our fixed cost remaining what it is, obviously the margins are impacted. Our targeted capacity is far higher than that. So we believe that the margins in we've always maintained that our overall margin guidance is between 8 to 10% for both FTRS, which is freight forwarding stock, and PRS, which is passenger rolling stock business. And we believe that that is something which is a pretty manageable or achievable margin for both our businesses. Once we, of course, reach a certain base volume. The first train has to be developed and manufactured and supplied in 2 years, and thereafter all the other trains would be within about 4.5 years thereafter, and then there is a 35-year maintenance of all these trains. We would be producing the base coach in Calcutta in our plant, and the final testing assembly would happen in the railways facility in ICF in Chennai.
All right, that's the stock. That's the management of Titagarh Wagons, and remember, Titagarh Wagons is perched at a record high level, and also like Avan said, we could also call it an you said bazooka, but we can also say that it's an ET now impact that we are seeing on the stock. But let's talk about iron exchange, because a short while ago you had a flash on the bottom of your screen which mentioned that the board has approved a 10-for-1 stock split. So just let's take a look at iron exchange for now. No doubt news come out, the stock was doing absolutely nothing, but what we are picking up from agencies is the fact that the board has approved 10-for-1 stock split. So watch out for that particular counter. Right now, off the day's lowest point, trading higher by approximately 1% as we speak. But before I'm coming to you, let's talk about MTAR Tech. This year has been relatively a good year for this particular counter, but do you think that it will be able to sustain the momentum?
Yes, actually recently since the beginning of this month, it has seen quite a steep up move, and currently we can see from the past 2 trading sessions that it has been retracing and seeing a bit of a dip or a correction. So it's giving a buying opportunity since the overall trend is yet bullish. So one can even look at buying in a range between 1710 to 1720, maintain a stop loss below 1690, and can expect an upside target of close to 1800.
Tech. Moving right on then, let's discuss Medanta then. And Ashesha, why is that in the spotlight today?
Yes, Medanta is in focus on the back of a brokerage note. Jefferies, in fact, has come out with a note where they're maintaining their buy rating on the stock, and they've given a target price of 630 rupees per share. The stock currently trades at 497 odd levels, indicating a 25 to 27% upside from the current market price that Jefferies is betting on. They say Lucknow is emerging as a healthcare hub for central and eastern Uttar Pradesh region, and currently this region is seeing significant demand-supply mismatch. They also say that this mismatch could result in strong revenue and margin traction for Medanta, which is the largest private sector healthcare player in the region. They see upside risk to their estimates from Lucknow, and for now they are maintaining their buy rating on the stock with a target price of 630 rupees per share. The stock is not doing much off the highest point of the day as we speak.
Let's move on and talk about Bank of Maharashtra then. Vamakshi, why is this one in focus? What's the news for you?
Well, Vinny, the Economic Times has reported that Bank of Maharashtra is looking to raise 1,000 crores via the QIP route, and with this, the promoter holding is expected to come down by nearly 3 to 4%. The promoter holding, important to note, is at nearly 91% currently. Now, the MD of the company, A.S. Rajiv, has said that the QIP is likely by the first quarter of this financial year itself, that is in FY24. In fact, the QIP was planned back in Q4 of FY23, but that could not go ahead. It was deferred due to the market weakness. Recently, the company also announced that a board meeting will be held on April 24th, and they will be considering raising nearly 7,500 crores via equity in the entire financial year FY24. Now, this could be on the back of SEBI's mandate wherein the public ownership for the company should be at least 25%. So that is the news flow surrounding Bank of Maharashtra. As of now, the counter is definitely reeling under pressure, trading at the day's lowest point, 1.75% down.
On forum, let's talk about Tirumalai Chemicals. If you look at this particular counter over the last one, it's done absolutely nothing. It's just in the last 1 month that the stock has started performing well. So do you think that it's now broken out of that consolidatory phase and it is going to move only higher?
As you rightly made a mention that has been consolidating from the past 1 month and is attempting to break out. So today is actually what we are seeing that. So since the beginning of Feb, the stock price went into a consolidation phase and the range was between 170 to nearly 195. Today, the stock price is making an attempt to break out. In fact, it was up by closer to around 5%, and right now we can see a bit of a profit booking coming in. But at the same time, it's very close to the breakout levels, so hence it yet invites buying opportunities at current levels, and one can even look at maintaining a stop loss at 187 and can maintain a stop loss below the levels of around 187 and can look for an upside target of closer to 208 to around 210. Additionally, I would just like to add on that since the past 2 trading sessions, there has been a good increase in volume which supports the bullishness, thus a higher chances of the stock price to move up ahead.
Volumes also supporting it in the last couple of sessions and target price of 208 to 210. Let's move on and talk about a textile counter. We have Indo Count Industries that is in focus today, and Nuvama has actually come out with a note on the full textile sector and specifically on Indo Count as well that they've highlighted. Now, first, let me highlight the points coming in on the textile sector. They said that they faced the perfect storm in 2022 given that there was a demand slowdown in exports due to high inflation, supply chain disruptions, record high commodity costs and several other factors that impacted the margins of the company as well. Now, going forward, they expect a sequential improvement in terms of the demand due to normalized inventory levels at the retailers end. Correction in cotton prices and freight cost is something that will support the margins as well as the healthy return ratios on lower debt levels and minimal capex requirements are something that will support the textile players. Specifically, Indo Count, when you look at it, there was a management commentary that had come in as well, which they highlight is that retailers appear to be quite enthusiastic in terms of during the last home textile show in Jan 2023 and during the market week in US in September 2022 as well. So there is indication that yes, retailers are going in and buying, but inventory in supply chain has fallen to 28 weeks from 40 weeks at its peak as well. So yes, keeping an eye out on that commentary coming in from the management in the note as well. And Nuvama is positive on the textile space. Keep an eye out on Indo Count, up 4% trade.
All right, that's Indo Count for you. But let's talk about a stock that started recovering after we had the management on ET now, and that is Tata Communications. If you look at that particular counter, it's seen a recovery in excess of about 5% from the day's lowest point. Firstly, let me just take you through the numbers of Tata Communications. If you look at the consolidated revenue, it came in higher by about 1% on a quarter-on-quarter basis at around 4,569 crore rupees. The EBITDA, however, was lower by about 4% on a quarter-on-quarter basis at around 1,034 crore rupees. PAT also was lower by about 17% on a quarter-on-quarter basis, and the EBITDA margin also saw a decline coming in at around 22.6% versus 23.8% on a quarter-on-quarter basis. But we had the management, like I mentioned, on ET now, where they said that they don't envisage any slowdown in the growth momentum going forward, and also they've said that the deal wins are much larger right now than they have seen previously. But we also spoke to the management, Vinny, and let's hear out exactly what the management had to tell us.
The people addition go into the frontline sales, marketing, solutioning, which I had called out even a year ago, saying that we require to invest in these markets for now people to start taking the new products and solutions that we are bringing out. Our order booking this year that has gone by, significantly increased over last year. Our addition is one of the best that we've had over the years. So, and if you look at the large deals, that has grown quite significantly in the last year. And because that, was one of the indicators for us to see, can we go to a customer to be more relevant? Can we construct a deal that is large enough across all these portfolios? Because prior to that, we had a lot of deals, but, a lot of smaller ones, and it was running very, very fast to stay in the same place as it were. But now we are seeing the color of that change, where we are seeing larger deals, and the number of large deals we have done is significantly improved. We continue to see good traction. As long as the customers are still going to be in the path of their digital transformation, and more so a cost-led digital transformation, we don't see slowdown in the momentum that we've been able to pick up in the last 3 quarters.
Can I say that for FY24, margins automatically should expand towards the upper end of the range? Your stated guidance band is 23 to 25. Will it go back and normalize there?
I think 23 to 25 is our aim, but I wouldn't be too fast if it continues to operate at the lower end or even marginally.
All right, that's Tata Communications. It's certainly one of the key stocks to watch out for in trade. But let's track technicals then and Forum talk about Chola Finance. Pretty range bound over the last 1 month. Are you foreseeing some sort of a breakout? What levels should one track?
Cholamandalam Finance, since end of March, had witnessed a steep rally from the lows of around 717 to closer to around 850. Post that, we saw a bit of a decline, that is in the past few trading sessions, which was as per the Fibonacci retracement nearly 23.6%, and post that we've seen a very consolidated move. However, the consolidation has been closer to a resistance of around between 850 to around 852, and since it has been consolidating on the higher side of the range, one can look at adding in or accumulate the stock gradually and maintain a stop loss below the levels of around 827. Once we see the price making a breakout from 852 levels, we can expect an upside target of closer to around 885.
That's Chola Investment for you. Let's move right on then and discuss the next mover, and that's NBCC. It's been an order win for the counter as they've been awarded a project. This is worth about 208 crore rupees from PWD Puducherry. In fact, what we understand as well is that under this project, NBCC will be providing the design, the engineering, as well as project management services for planning and designing and execution of this platform for Public Works Department at Puducherry. Just recently as well, the company had received orders from the Ministry of Home Affairs worth about 448 crores, and this order win is keeping the stock afloat in trade today.
Okay, let's talk about Suven Life Science on the charts then, Forum. How are you looking at the charts for this one? Last 1 month, what an uptick of 21% in terms of returns in just the last 1 month. How much more upside? Is this just the beginning for Suven Life Science?
Well, before this last month, there was clearly the stock price was in a downtrend. However, from those lows of around 45 levels, there has been a steep up move. And the past 4 to 5 trading sessions have seen a very consolidated move. But now today we can see there has been an up move, and currently the stock price is up by around 4%, and it is attempting to break out from this very small consolidation. And when we saw a steep rally in this last month, there was a good increase in volume, which was adding more bullishness to the stock. So since it is attempting to break out from this small consolidated pattern, and along with that, on a broader perspective, it's giving a breakout from an inverted head and shoulder at around 8.4. So since currently the stock price is trading very close to those levels, it invites buying opportunities at current levels. And simultaneously, there is a very short-term resistance that today is high. It has touched very close to the 100-day moving average. But since there has been a good increase in volume, I expect it to surpass the short-term resistance, and the upside can be closer to 64.40. And one can even look at maintaining a stop loss below 54.90.
All right, so that's the take coming in on Suven Live. Shesha, Tata Steel as well as Jindal Steel, why are these counters in focus?
Well, yes, steel counters have been in focus for the last many trading sessions, and that was because of the data coming in from China. In fact, Nifty Metal is all set to snap its 9-day gaining streak today. Today, of course, it is in focus on the back of note that has come in from CLSA, where they say that pickup in China demand and softening coking coal prices could drive re-rating for the entire steel sector. They say gross exports from India are likely to remain high. Remember, it was in the month of November when government lifted the export duty that it had imposed, and now CLSA believes that gross exports are likely to remain elevated at least in the coming quarters. They say global price trends could dominate India prices. They see several near-term re-rating catalysts emerging for the sector, and hence they are preferring JSPL and Tata Steel among the entire pack. So on the back of this report that has come in from CLSA, both of these steel counters are in focus today.
All right, watch out for those newsmakers in trade. Moving right on then, let's discuss heavyweight HDFC Bank as well. Vamakshi, in greater detail, what's it in the news for today?
Ahead of its merger with HDFC Bank has announced the appointment of two top executives. Now, RBI has given its nod for the appointment of Kaizad Bharucha as Deputy MD and Bhavesh Zaveri as the Executive Director. Now, both have been picked for a period of 3 years with from 19th of April. Kaizad Bharucha is a seasoned banker carrying an experience of over 3 decades and in fact has been associated with HDFC Bank since 1995. Bhavesh Zaveri, on the other hand, he currently is the Group Head of Operations, Cash Management and ATM Products of HDFC Bank, and like Bharucha, he too holds an overall experience of 3 decades. He joined HDFC Bank in 1998 in the operations functions. So that is the news for surrounding HDFC Bank. The bank has appointed two top executives ahead of its merger, and that is the reason why the counter is in focus today, up nearly 0.3%.
Okay, let's move on and talk about Viatech Wabag Forum. This stock has just seen an absolutely wonderful move when I look at it. Last 1 year, 26%, 6 months, 41% gain, and that gain has and traction in the stock has been cutting even now. How much more upside is this? Like, could we expect more of an upside or some time for correction?
After almost consolidating for nearly 4 months, finally the stock price has given a good breakout, and as you rightly mentioned, it's given a very stellar returns as well. However, the trend yet continues because the stock price technically has been forming higher tops and higher bottoms, and recently, along with the price move, the stock has seen an increase in volume. After the 2 days of decline what we've seen since in the past 2 trading sessions, it has again given us an opportunity from a trading perspective to buy the stock. And additionally, the other parameters like the RSI, there has been a positive divergence, and along with that, the moving averages, where a 50-day moving average is now crossing above the 100-day, is adding to the bullishness. So one can in fact look at buying it or add on more in case they're holding on to it, and maintain a stop loss below the levels of 373 and look for a higher target of closer to 415 to 420. Thus, even if we look at the risk reward ratio, it is much more favorable.
Okay, keep an eye on those levels. Still some upside left for Viatech Wabag is what Forum is saying. Let's move on and talk about Gujarat. Now, Morgan Stanley has come out with a note on Gujarat Gas. What they're saying and highlighting is that they are giving a target price of around 564 rupees per share. Rising chemical demand and LNG cost normalizing should be supportive for Gujarat Gas margins and volumes. Propane versus LNG, they expect a recovery in the petrochemical demand in China to drive the propane prices higher, a key to the gas demand recovery as well. And higher propane prices makes gas more favorable to Gujarat Gas industrial users as well. This would drive up the volumes for the company. They see an attractive valuation at 18.5 times that 1 year forward PE on an EV to EBITDA basis as well. So let's keep an eye out on this one. Target price, what they've given, and tweak the target price a bit on the higher side to 564 rupees from previously 562 rupees per share.
All right, moving on, let's talk about ethos, and this particular counter is soaring in today's trading session. If you look at the stock, it was trading higher by about 6% last time that I checked. Right now it is subdued. It's actually given up those gains, 3% uptick coming in for ethos. And an exclusive partnership for Laurent Ferrier's entry into India. Remember, it is a luxury watch space. So on back of that, you have ethos that is buzzing in trade. 3% uptick is what the stock is at right now, but at one point in time it was trading higher by about 6%.
All right, let's get a move on then and focus on the next stock that's on the radar forum. And you're talking about alkalamines, and just looking at the attraction that we have witnessed over the last 1 month or so, the stock seems to be picking up steam. At 24.50, what exactly is it that you're advising one to do?
Last Tuesday, the stock price did see a very steep up move by closer to around 6.5 to 7%. And post that trading session, we've seen a very narrow consolidated range, which was between 2390 to around 2480. So since it is very much consolidating at the higher side of the range, we can look at buying the stock. It's a safe level. And secondly, the stock prices just move above the 50-day moving average, which indicates that the short-term trend of this stock is turning bullish. Thus, what a breakout above 2480 can trigger an upside momentum of close to 2550 to closer to 2560, and one can look at maintaining a stop loss below the levels of 2380.
So keep an eye out on those levels for alkali amines. But moving on, Ashesha, EU Small Finance Bank. Why have you picked up this stock for us today? What's the news flow here?
Well, yes, this counter is in focus on the back of a brokerage note. Morgan Stanley, in fact, has maintained its overweight stance on the stock, and they've given a target price of 835 rupees per share. The stock currently trades at 675 odd levels, indicating a 25 to 30% upside from the current market price. They say RBI granted authorized foreign dealer license to the bank, which in their opinion is a positive. They also say that it will boost the fee income of the company in the medium term, but the benefits will start kicking in from FY25. AU's long-term growth potential is very strong. This is what Morgan Stanley has to say, and they say that they continue to see strong earnings growth over the next few years. The stock is not reacting much to the report that has come in, but Morgan Stanley is very optimistic on the stock.
All right, that's AU Small, but Forum coming to you for the last talk of this edition of Market Fatafat, and that is Paras Defense.
Well, Paras Defense, since the month of March, has seen some exceptional increase in volumes, and in spite of the stock being in a downtrend. However, since March, now the stock price has now stopped forming lower lows, but at the same time has formed like a double bottom. So currently, it has been facing resistance closer to 533. But now, from the past few trading sessions, in fact, the consolidation has now narrowed down close near the resistance level. So since now there is absolutely low volatility, it gives an opportunity to buy the stock even from 3 to 6 month time horizon, and one can look for a lower level to add in more, that is closer to around 506 levels. One can look at maintaining a stop loss below 487 and expect an upside target of closer to 595, which is nearly 14% from the current levels. Thus, even adding more, rather buying at current levels, adding at a decline would be a perfect way to invest in the stock.
All right, there you have it. That's a thumbs up on Paras Defense. Thank you so much, Forum, for joining in on the show. Ashesha as well as Vamakshi, good to have you guys on board. And from Cheryl, Vinny, me, and everyone that put the show together, thanks for watching. Closing Trades is up next.